Good morning. Today is the 10th of July 2014. Alpha Trading Strategies here. Hold on. Okay, there it is. Okay, present time is 10:30, July 10th, 2014. We're looking here at three charts. We're looking here at Amazon, BIDU, as well as the ES. For those of you that have just come to our site here at Alpha Trading Strategies, we We teach a complete system. We are revealing, I should say, for the first time to the general public, a complete trading approach that basically teaches you from A to Z exactly what to do in order to generate a weekly income. Now, notice I didn't say to make money. I want to rephrase that and posit it as a weekly income. The reason being is that a weekly income is more predictable. It can be more consistent. Typically, there's less risk involved. Making money in the market, unfortunately for many traders, it just entails a lot of risk. A lot of retail traders just basically take too much risk. Okay, so what we're going to do is we're going to jump around a lot of things today. We're going to conclude a couple of trades that we're in today, that we've been in, that we're going to conclude because they've just about reached their limit. But let's start from the beginning. The first step with anything in terms of trading, in our belief, is you have to have a core literacy skill set of what these bars mean in terms of the professional mindset. Let me repeat that. In order to trade, in our opinion, a trader must possess a core literacy that pertains to reading these bars to decipher/understand the professional mindset. You must be able to tell me exactly what is taking place in real time in terms of the professional mindset without any indicator. If you can do that, or once I should say a trader is able to do that, they have now learned to play half the piano. Actually, the most integral part of the piano, because they've learned to read music. They've learned to read the bars the way that a musician reads music, or the way that you read on a sheet of paper. It is no different. No difference. Okay? Now, the average trader out there does not know how to read a chart. We know because we've trained so many around the world. They don't. There's no course on it because professional money wants traders to buy at retail price levels. That is your predetermined lot in the trading world. You, you are supposed to buy retail. You. You know that Uncle Sam picture pointing you? That's, yeah, you. You are supposed to buy retail. Okay. The average trader scalps. The average trader is always long. The average trader doesn't short stock. The average trader, if they do play in options, they are buying options. The average trader uses lagging indicators because they have to have something in order to see what's going on. These indicators are Trojan horses. They are given to you freely, and traders dive into them with glee like a kid on Christmas morning, you know, with all the beautiful colors and the fancy names. I mean, we can think of a name right now. You know, you know, the by thou, no, let's go with let's connect something. The BIDU cortex. That sounds good. The BIDU cortex indicator. Let's throw some fancy oscillators on it, and you're going to spend 6 months trying to figure that thing out of your life. Okay? Take all that stuff, take it off the table. Just move it off the table. And here we are looking at the chart. Now, there are three components to what we teach here. There are three components that we utilize. One is price. The second, meaning that at certain price levels there is going to be a action, a coordinated action. Number two is volume, the volume that is associated with each bar pursuant to its time frame or the type of bar type, that sort of thing. And the next is what we call alpha or spread. Now that is a subtriangulation of three components of each bar, and that is the high, the low, and the close. So if we were to look at this bar here, it would be the high, the low, and the close. This bar here, the high, the low, and the close. Or let's say this bar here, the high, the low, and the close. What we've done is we've broken them down into all of the bars that you see on the chart. We have gone over hundreds of thousands of charts, thousands, tens of thousands of hours, and we have broken them down into only one of 12 bar types. So now you have an alphabet that you have sitting right there next to you. But in addition to that, we have sequenced a reversal, sort of like a DNA chain. We've sequenced the reversal, meaning there is a certain combination of bar types that's with volume that signal a reversal. Now, for the first time, you are able to see when professional money is getting into the market, and you are able to enter at that level. And if you look at, the dozens of trades with crude oil, you'll see that we've got what is 78% accuracy. Is it 78%? 70, yeah, 77, 78% accuracy, which is unprecedented. But now what we do is we say, do you know what? We can do better than futures. We were trading futures because futures gave us more volatility, more leverage than stocks. But you know what? We can do better than that. And now, after hundreds and hundreds of hours since the beginning of this year, we have now officially made the transition over into the futures market. Excuse me, the options market. What are we doing with options? What we determined is that these reversal points identified an imbalance in the options market to the seller. Now, by selling options, now anyone can sell options. Anyone can put on credit spreads. I mean, there's no secret about that. With anything, though, it's where you get into the market. And so where we get these signals, there is an imbalance of volatility that we are able to sell. We capture a credit, we identify our risk, and now, as opposed to the futures market where our money was made with just a directional uh, emphasis, meaning that it had to go up, because we are the seller, price can go up, down, or sideways. And now we have time on our side because time is factored into the price of the component of the option. So let's look at what we're doing today with what we've done so far. Okay, the Apple that we sold and collected a $500 credit. Right now, if we close that out, we would take $450 of that. The Amazon that we sold, so far we've got 5,800 credited, 6,000 now in our favor. This morning we sold some BIDU puts. We collected 925. Same sequence. Crude oil, we've been into that. We're up 1,500. And ES, right now we're up 750. Okay. And we sold, what did we sell? We sold 1925 and the 1920 puts. We bought the 1920 puts. What we want to do though is so we're going to close out the Apple soon, but I want to take your attention to a put that we put on this, a spread we put on this morning to show you exactly how when we get our signal, how overvalued the puts are and how quickly they collapse in value, and we collect that credit. We collect a portion of that. So this morning, today, we sold next week's July 14th. Okay, we sold the 312. We we sold the 312 and we bought the 312.50. We got our sequence in Amazon. Okay. And so once we got our sequence, we looked, we identified the put we wanted to sell. So we got a credit. Let's pause this for a second. We'll pull up another chart. Okay, follow me closely. We sold negative 50. We sold Amazon July 14, 315 put, and we sold it at $2.51. Let's see what that, and we bought one at 195. That's our protection. And so we received a $56 credit. Let's look and see what that 315 put that we sold for 251. We want that to fall to zero, ideally. Let's see what it's worth right now. We want that to have fallen in value because when we got our signal, these puts were massively overpriced. We'll pause it. Okay, so here we are, the Amazon, and this is the July, should come up here, July 14, 315 put. We sold that at 251, right around here. Now, we're looking at the chart of Amazon. This is just the chart of the option itself. So we're not looking at the option price because this doesn't tell us anything. It is what it is when we get our sequence in the stock. But we sold it at $2.51. This option has already lost over 50% of its value. That's what Isometry and PVSA does for us. Okay? That is amazing. Let's look at something else. BIDU, we're up 950. Our margin requirement on that was 12,500, so we are at about, I don't know, 7-8% on our money in a few hours on that. And we were credited, let's see what we were credited. Okay, we were credited on BIDU $1,750 into our account when we sold that. Let's look and see what the options are doing with what we sold. Okay, there it is here. We sold the 172 put at $1, and we bought at the same time, and that gave us a credit of 65 cents. Let's see what this put that we sold at $1 has fallen to. Okay, BIDU is at right now 49 cents. The 172p put. 172p put. Already it has lost over 50% of its value. And that's what we're able to do with this. Got a couple of questions this morning. Your course, why is your course, let me put my glasses on. What do you base the price of your course on? Listen, we base it on the fact that information is the most valuable commodity in the world. And we are teaching you a complete system, and we are showing you this in real time that you can see for yourself. We expect you to follow exactly what we do. Okay? And we have a system which will give you the greatest value for your capital. If you want to haggle, you have to go other places. That's why we show you this in real time, because most people simply are not going to do it. That's our answer. Uh, how was Catalina? Catalina was great. It was great. I wish we were there for another day, but glad we came back. I was up about 4 o'clock. They blamed this on something in Portugal, and we saw the ES future selling off overnight, and we knew that it was going to be a great day for options writing. So here we are. All right, guys, that's going to do it. So right now we're just sitting here, and we're going to close this Apple out in a few minutes. There we are. We're up eight. That's that. Okay, that's going to do it, guys. Um, And oh, and we're up with the ES. All right, that's gonna do it. Thanks for watching.